Well, we are midweek through trade in Indian markets, which are set to close the week on Thursday, given the bank holiday which is there on Friday. When we look at how global markets have shaped up over this week, the key metric which was to look out for on Tuesday in trade was the US retail sales data, which came in with a 1.7% month on month growth versus the estimated 1.4%, substantially better than expected, and that led to all three US benchmark indices going up on Tuesday on the back of brighter economic outlook. Mind you, we are well before Christmas at the moment, and leading up to Christmas with this kind of retail sales data, that kind of helps the US economy. When you look at the Dow, it was up around 15 basis points, but the S&P 500 was up around 0.4%, with the Nasdaq rising the steepest, up 0.75% in trade. Mind you now, yesterday we did speak about two Federal Reserve presidents talking about Federal Reserve policy on the back of strong inflation. Yesterday on Tuesday, what came out was the St. Louis president James Bullard also spoke openly about how the Federal Reserve policy should be shaped up, and he called for a more hawkish stance on policy. The other thing which ought to be in focus is that the Fed chair is due for reappointment in February, and President Biden is or rather announced that he is going to be announcing who the next Fed chair will be in the next 4 days or so. Biden also had a bit of a chat with his Chinese counterpart Xi Jinping, and commentary around that obviously affected Asian markets in early trade today. When you look at how European markets outside of the UK closed, they closed positive. The FTSE was down around 1/3%. However, the DAX was up around 2/3%, with the CAC 40 up around 1/3%, and the Stock 600 also up around 17 basis points in trade yesterday. Moving on to how Asian indices shaped up. Asian indices, as I did mention, were in the red after the Biden-G talks. When I look at how Asian indices are looking today in early trade, the Nikkei is down around 0.5%. The Hang Seng is down around 1/5%. The ASX 200 also down 3/4%, and the Kospi down 4/5%. So all these indices in the red. However, the Shanghai has managed to hold on to some gains, 0.25% up in early trade. The Shanghai, the SGX Nifty futures for the month of November were also lower, closed around 3/4% lower in trade yesterday, and is a further 0.25% lower in early trade today. When I look at commodities, the London Metal Index closed 1.3% lower in trade yesterday, and it's down for a second consecutive day on Tuesday. The London Metal Index for aluminium was down over 3%, and iron ore was down over 2%. So those were the leading drags on that index. Oil continues to remain flat. It's at $80.2 a barrel in early trade today, and gold prices cooled off a bit. Mind you, gold had risen sharply due to inflation, but that has now come back down. It's at $1857 an ounce, given the positive economic sentiment, especially driven by retail sales in the US. The dollar is at a 16-month high on the back of the same metric, which is US retail sales data, positivity coming through in the economy. The dollar index rose over 0.5% in trade yesterday and is flat in early trade today. The US 10-year Treasury yields continue to rise. It's at 1.632%. That's the highest it has been in the last 20 odd days, 3 odd weeks. And that signifies the rise in the dollar index as well. Bitcoin though fell below the 60,000 US dollar mark before rising back up, inching back up above the 60,000 US dollar mark as major cryptos fell. Now, this particular crypto Bitcoin has fallen over 10% in the last week or so. That's a roundup of how global markets have shaped up on Tuesday.